Hey everyone, welcome back to Money Matters Made Easy. I'm Izzy, your host, and today we're diving into a topic that can help you maximize your returns and minimize your tax liabilities: tax-efficient investment strategies. Now, I know taxes can be a bit overwhelming, but understanding how to make your investments work for you can make a huge difference in your financial journey. So let's get started. One tax-efficient strategy is to focus on long-term investments. By holding onto your investments for more than a year, you can qualify for lower long-term capital gains tax rates. This means you get to keep more of your hard-earned money when you decide to sell. Another strategy is to take advantage of tax-advantaged accounts, such as IRAs and 401ks. These accounts offer tax benefits like tax-deferred growth or tax-free withdrawals, depending on the type of account. By contributing to these accounts, you can potentially reduce your taxable income and save more for your future. Next, consider diversifying your investments. By spreading your money across different asset classes, you can potentially reduce your overall tax burden. For example, investing in tax-free municipal bonds can provide income that is exempt from federal taxes. Lastly, don't forget about tax loss harvesting. This strategy involves selling investments that have experienced losses to offset any capital gains you may have. By doing this, you can potentially reduce your tax liability and increase your overall returns. Remember, these strategies are just a starting point. It's important to consult with a financial advisor or tax professional to determine the best approach for your specific situation. So there you have it, some tax-efficient investment strategies to consider. By implementing these strategies, you can make the most of your investments and keep more money in your pocket. Stay tuned for more helpful tips and reminders as we continue our Back to Basics series. As always, thanks for watching, and remember, you've got this.